We spend way too much time trying to figure out why more people keep being hired and not enough time figuring out why more people aren't being fired. Right now, we have this temporary lull in the cliched red-hot job market where we actually are waiting for something negative to happen that will make the Fed declare victory in its fight against inflation. At this point in a rate hike cycle, you'd expect a lot more job losses than we're seeing. And those layoffs cause people to spend less money, which is what historically stops inflation. We're not seeing that now, though. And I think I finally realized why. I think we lack creative destruction. Ordinarily, companies would merge and then fire a bunch of people with overlapping jobs. But lately, mergers keep getting blocked, or at least delayed, by the Federal Trade Commission. I know it sounds almost quaint to many of our younger audience, but we have these things called doctrines, where our government wants to preserve the right of the consumer to not be price gouged by powerful enterprises that have been put together by rich moneymen, malefactors of great wealth, as Teddy Roosevelt called them back in 1907. Back then, businesses more or less called the shots because the government was much weaker than it is now. Too weak to stop companies from stifling competition or colluding to keep prices high or outright monopolizing entire industries. Now, the FTC was created a little over a century ago precisely to stop this kind of bad behavior. Ever since, they tried to thread the needle between allowing enough mergers to create more efficient entities without allowing so many mergers that you end up with little competition. Sometimes it's leaning more to one side than the other side, but there were always plenty of mergers that the FTC approved. That all changed when Joe Biden appointed someone named Lina Khan to the FTC chair. She's upended the doctrine and invented a new one, which more or less views all mergers as hurting the consumer solely in order to help the malefactors of great wealth. I wish I were exaggerating, but Khan's actions have certainly created the impression that she sees all mergers as inherently anti-competitive and enriching the entitled classes. Now, you could argue we have a system of checks and balances in this country. Lina Khan's FTC doesn't have absolute authority to block these deals. She can be overruled by a federal judge. There's also the Justice Department's antitrust division, run by a pretty reasonable guy, Jonathan Cantor, former corporate lawyer from Paul Weiss. The difference between these two is just really stark. But because Khan's so dead set against practically all mergers, most of the major executives that I know are saying, you know what, let's not merge at all. Forget about it. Maybe we wait and see if the Republicans win next year, because we do anything, the FTC is just going to block it anyway. And you know what? They're right. Can't blame them. But that impact is creating a world where many industries have no rationalization at all, or certainly no creative destruction. We aren't seeing a fraction of the mergers we need to see in retail for brick and mortar to possibly stay competitive. Entertainment needs maybe half the companies that currently exist. We need far fewer and better drug companies. We have so many oil producers that it's nuts. Same with restaurants, ad firms, real estate investment trusts. I could go on and on. Only airlines need more competition than I can see. But I'm pretty sure Lina Khan's FTC would try to block any deal in any of the industries I just mentioned. Any. There's one other industry with too many people that Khan doesn't really preside over, and that's the banks. We could actually do probably without 4,000 banks. It might not even matter these days, given all the fintech bank alternatives that have been created in recent years. But we have a doctrine against bank consolidation, and I like that. It's only been breached once. The J.P. Morgan shotgun wedding for First Republic recently, and the regulators only let that happen to stop a bank run. If Khan were an FTC chair, we'd be seeing huge layoffs in this country right now as businesses merged and fired people. Maybe you think her view is a positive. It's certainly good for the people keeping their jobs, but it's bad for inflation because it means the price of labor stays stubbornly high. Khan's one of the greatest creators of wage inflation in our nation's history. And from the stock market's perspective, that's a very bad thing. Same for the Fed. Hey, same for you when it comes to your costs. As long as Khan's there, we likely won't see the giant layoffs that we normally get at this point in the cycle. Inflation killers for certain. Whether you like it or hate it, at least now you know a big reason why inflation is far more sticky than it should be right now. I like to say there's always a bull market somewhere. I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.